Greetings, Jedi traders. David here of TradingFibs.com to bring you the technical outlook for week 11 of 2018. Hey guys, as always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what's going through my head on this given weekend as we head into the week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, Jedi traders, let's go ahead and jump into the weekly gaps as we saw them there. Price action on the market in week 10. What a lift as we've been getting to roll into contract rollovers. On most of the platforms, volume will completely shift or had shifted on Friday, Monday into Quad Witch Friday as we roll out the week. So keep that in mind. But as far as week 10, there it was. NQ, bang, right to the all-time highs, leaving some open gaps below. But we've been pushing above that 200-period moving average and moving back to those all-time highs. The only thing I could show you as far as technical trend here, 10 back above the 50 on the RTY, 10 above the 50 on the NQ, leading the indices upside. We still got a little bit of work on the YM and the ES. That could happen. We'll take a look at the bigger picture on the ETFs and the indices, but there's your big picture week 10 as we definitely finished above the open for the week. All right, let's run through some charts, see where we are currently in the technical trend, and see where we are headed for the outlook for the week, and see the highlights ahead. All right, so big picture ES moving averages, price action again. I just mentioned that 10 still below that 50. We got to get that 10 above the 50 to get a confirmed uptrend, but from the perspectives of off the lows, off the 200-period moving averages, we've definitely been back upside. So market action continuing to close above the previous session, at least here on the daily, doing a nice job towards the end of the week. So price action back above the 50. Once we get that 10 above the 50, love to call that definitely a confirmed uptrend from this trader's perspective. All right, on the weekly, pulling out as each week on the bigger picture, as we've known the run up since 2016 there through 2017. We're in almost Q2 here. We saw the pullback in the market, threw up an MML there, short-term MML on the bigger picture as we bounced off this resistance. Again, this picture has been here for quite a while through 2017. We saw ourselves headed up to these levels. We definitely pulled back. I went ahead this week and pulled another MML shorter term square width in here, and sure enough, we didn't find that support at 2,500 as I had mentioned. I was hoping we would, but when you draw in the smaller square width frame here, you could see that the market's definitely found support on the MMLs, the Murray Math levels, and sure enough, bounced right back upside and supported by other ETFs and other indicators to show that the market was poised for another move up. And sure enough, we're going back to visit those all-time highs. Keep an eye on those moving averages as well. All right, looking at some of the key ETF. Oh, let's throw up the SPY as well. Again, nice picture here. 10 still below. Price action bounced off the 200. So there it is, week 10 price action on the ETF bounces off from February, off the bigger picture. We saw that pullback there for a couple weeks, days at the end of February, and then the beginning of March, finds the support off the MML. So you can take the SPY on the daily and merge that with the bigger picture also on the ES weekly, and sure enough, they matched up, and we got a nice bounce back upside. So we're looking back up here to 281.25, that zone, up to 285.16 weekly. There's no question we've been holding here at the major support, 265.63, and revisiting back up to the resistance. Unable to pull a shorter term MML on this as all levels are consolidated up here. So all levels up here all the way up to 292 on the reversal. All right, so let's take a look in week 10. How did the overall ETFs that I follow to give a big picture of market momentum? I'm looking at the VTI, the Total Stock Market Index. We follow this each week. The bigger picture still holding up like we just saw on the SPY. Off the bounce here, 200 SMA that we saw in February. We continue to move upside, so just a poised week. We would like to see that 10 get back above the 50 to be back in all sync upside. But again, we're not waiting for that 10 to be back above the 50, call it confirmed uptrend necessarily. We see price action bounce up. Intraday will always be a different picture. I say this each week. You got to be ready in both directions. You got to bounce. You look at the shorter term MMLs, swing traders, you had a position to jump on any of these indices back upside, but overall picture, we've bounced off the MML lows. You had an opportunity to jump in at those lows if you go back in the recaps. And then, but we'd love to see that 10 back above the 50, back above the 200, which we know they are. Throwing on some other indicators in the weeks to come. I hope to add an ADX perhaps at the bottom of the charts here to give another optional view of confirmed uptrend. For right now, SPY, nice move back. VTI in sync with the rest of the market. Total stock market index definitely back. HA bars trending up. All right, taking a look at the FFTY. This is the IBD 50 fundamental stocks that represent solid core based on the strategy. You don't have to do the homework. The homework's been done for you. Gives you positive outlooks for these companies. They're strong fundamentals. You throw on a technical of Heiken Ashi bars, moving averages, MMLs, whatever it is that you're watching. You got a nice move back upside again above the 200. We're a very strong week here in week 10. HA bars trending up, so very strong week. As we roll out, you can see the levels ahead that might offer some resistance here. But for now, total stock market index and the FFTY fundamentals very strong, and a confirmed uptrend remains. Taking a look at the LDRS, the leaders, these are the ETF leaders. Again, we found a little bit of consolidation, a little bit of pullback, holding, and it held. Price action broke back above the 10 EMA, so nice confirmed back uptrend. Weekly, same picture. This is a new ETF, so we got a little time that we need to catch up, add some other moving averages. So we'll be watching these through the months, and probably in a year from now have some better solid data. Again, this is the bigger picture. Go to the intraday or the swing position. Definitely better opportunities on a smaller time frame. I would use the Flex Renko, the Heiken Ashi bars on a smaller time frame, perhaps a 100-tick chart or a 50-tick chart. And maybe in one of these weeks we'll take a look at that. All right. Also, taking a look at the as far as the tech industry, has been an overall very positive earnings seasons. And so combining the XLK, the tech sector, with the FDN, which is the next ETF I'll go ahead and show you, it's been nothing but strong. Yes, we had a bounce back, pull back in the market, found the support at the major support resistance. So we're still in a confirmed uptrend, just re-supported by that NQ high on the futures this week. Tech sector. All right, so there it is. You got some resistance. You had it there. You saw it last week. It bounced right back up here, so we got all our levels up to 71.48, so we want to watch that. As far as the swing trader, just keep holding on. You got price action lifting up and holding above that 10-period moving average. That 10's been back above that 50 ever since back in mid-February here, so it's been a confirmed uptrend even with the pullback. Again, it's just about adjusting your stops. As far as the futures traders, it's just another support to show you that market is in an uptrend, but offer the idea that we do have some resistance up here, and to keep that in mind. All right, there's the same picture again. FDN had a solid week. This is the ETF representing those FANG stocks, including the Microsofts. Price action lifting up off the major support resistance all the way up here. Again, we just showed you on the XLK. We got some reversal up here up to 71.48. So keep in mind on the daily up to 134.38. You all know if you've been following MMLs, they can always reset, but that's why I love the bigger picture, especially intraday. For those of you traders watching those intraday charts, those 30-minute levels, absolute fantastic way to use them instead of the smaller time frames, 30-minute time frames. All right, taking a look at the UUP again. We've pretty much been in a confirmed downtrend with small minor pullbacks. The dollar index here on the ETF at the MML lows. So again, we're not breaking through downside. So I do like to bring that to attention. If price action is to lift off the weekly, we'll be looking up here to 23.83 first, all the way up to the major support resistance, 24.22. Got to break through that 10 EMA also. But we have 10 below the 50, below the 200, as we chop here in week 10 in between the two levels. Any breakout above here, we'll start then to look up to that 23.99, which should put us up to major support resistance. And we'll have to see the reaction in the market as well, which is tied right into the VIX. VIX coming back down, price action VIX dropping this week, so you could drop those time frames intraday. Nice. We don't have to be on those 20, 25 tick time frames. We're back down into some normal operations in our numbers. But overall, VIX off the MML highs, coming back down. We got the support. We got a little bit more downside movement here, all the way down to perhaps 25. But weekly, also big picture, found that resistance here at 50. And right now, with the 10 above the 50 and 20, it's kind of a mess, actually. You can't call one way or another. We know for most of 2017, VIX was in a complete drop, but now we got the chop. So that just means overall big picture is a volatile market in the bigger picture of a confirmed uptrend. So just, if you're trading the VXX, this is the bigger picture on the daily and the weekly. I would recommend you trade it on the bigger picture. I would say, drop down to a 150 tick chart, and then you get a lot more confirmed uptrend or confirmed trend. At least on the HA bars. But HA bars right now showing the pullback here with some more downside movement. Watch for the major support all the way down to the 100 here for at least week 11, and see if we can hold here. We are right at the reversal actually on the ETF. So VIX, we'll see if it just can hold here and bounce back upside. Yet to see as we start through in week 11. All right, taking a look at the commodities index here. I'll show you. I'll go ahead and pull up the Bloomberg as well here in a moment. Price action again lifted off the MMLs on at least for the swing traders. 10 tucking below the 50, so a little bit of weakness there, but we did find support off the short-term MML. So we'll see if this holds. If it holds and we break back upside, 10 will be back above 50. Bigger picture still upside, but we've shown a lot of sideways action here as we roll out the second quarter here of 2018. Still got about another couple weeks, but right off the MML, short-term consolidation. As we take a look at the bigger picture on the outlook here, we don't have many of the key commodities index. There's a Bloomberg Commodity Index here representing some of the key markets here. Again, red representing the Bloomberg Commodity Index here. We got grain sitting above. In the green, we got the softs, and just slightly masking right there the Bloomberg Energy. I believe that is, I'll have to go recheck. Could be petroleum, but petroleum has been down, so that could be energy on the numbers here. I'll have to take a look at the chart. Anyway, only 3 above the major index. This is, again, a 30-day outlook, 90-day. A little bit of a different picture, but again, I like to look at the 30-day picture, and so a little bit of consolidation, sideways action. The index just kind of hovering with a couple above. So bigger picture, Bloomberg Commodity Index. There it is, support off the MMLs as we roll into week 11. All right, I'm bringing the Can Slim back. We'll, as we saw that major drop there in December. Price action did find some ground here and actually bounced back up, found the resistance on the MML, pulled back to those lows again, so we're right back upside. Now, I wouldn't call this a confirmed uptrend yet. I still have no yet information as to why this complete drop here on the fund, but again, I'm willing shouting out there to our community here, see if anybody found anything out. But as far as the technicals are concerned, at least on a daily, nice swing positions off the MML lows. Again, we're definitely not in a confirmed uptrend. 10 below the 50, below the 200, as we'll want to see price action break, get these back in sync upside. The FFTY and the LDRS, total opposite direction. So Can Slim Fund here took a hit here in December, but bouncing back up, but finding a little bit of a challenge to get back upside. All right, took a little bit longer there on the recap for week 11, but week 10, excuse me. So let's jump into week 12 where we're at, taking a look at the ETF on the IWJ Industrials. I like to see, so this, again, together with the recap, where do we sit? Where do we sit each week? We have always geopolitical landscape as well. You got algos that will throw in a loop there, but when you take a step back and look at where is the market right now, obviously, big picture is market was strong for January, pulled back. It found support out there at 200 MA. You were wondering, is this it? Are we going down? Come on now, we need more red. hey, the market did what it did. It bounced off those key moving average institutional support and back upside. Now, we do have, in the coming week, we have quad witching, we have contract rollover. And no, I mean, I can't call out any major economic news that might be coming out other than maybe CPI. Maybe CPI is what we're waiting for this week. But one of those indicators to show that market momentum is upside, besides the moving averages, I want to see that the industrials and the transports are sitting together in sync. And that's exactly what I have here in week 10 on the IWJ, the IWT. They're back upside. So that is a market in sync. And when you put that together with the NIAD, which is the advancers decliners, with the Indu, with the index of the Dow, and they're both back in sync, we have a market that is upside. Again, if you're watching this intraday, or at least during the week, instead of the recaps, you'll know that as long as these two are in both directions, you can watch your futures. And obviously, we know you got to be ready on the futures in both directions every day. But hey, at least maybe a swing position, you'd have an opportunity to the upside, and that's exactly what we got here on both of these pictures. All right, so right now, confirmed trend, both upside industrials. Whether those levels hold here or not, we do have more room to the upside till our next level of resistance, but we do have a short-term resistance here. We'll see if we can hold at least on the HA bars by the daily. As long as those bars continue to move up in trend and these two are in sync, we got a confirmed uptrend together with the ETFs that I just showed you in the recap. All right, a lot of information to take in. We'll jump to the futures here in a moment. So big picture. I wanted to pull out another, for those IBD subscribers, this is something I like to look. If you look in your newspaper here, a second section, whether you get the digital edition, the psychological market indicators, you can check out IBD. But I just wanted to, these are some good overall big picture indicators. Taking a look here at the CBOE VIX. Again, always looking at that number 45. You can see how they tie that into the reversals in the market. So again, you could see obviously market action on the VIX pulled back, so the market swings back upside. But you got to watch those. You got to watch that VIX when that pops up above the key levels, at least 45, or at least above the 10-day moving average. You want to get concerned the market might take a reversal. Another indicator, bulls versus bears. When you see that bull versus the bear crossing, you can see a market pullback. We obviously see that the bulls are in control of the bears, so we're not readily concerned right now that we're at the tops. So if we see that crossover next week, we'll reevaluate and see if the market found at least a topping here. But another nice psychological market indicator. Two more here. The high-low ratio, puts versus calls. Another ratio that they put out here when the market obviously tucks below or gets below that number 1.0 level. Markets react here. You can see the market found a low here at 0.5, took a nice move upside. So again, another indicator. And as well as the outlook margin debt. I like this as a big picture. As you can see, market action once it broke a certain level here, had a reaction in the market. So we're looking, this is a tops in the market. So market action dropped here on when the index here, the margin debt broke above 50, their baseline here, I think it was 55. So we're nowhere near that 55 yet. So you're thinking the market, this is the tops, at least by this margin debt ratio. We're not anywhere near that yet. And so we got a ways to go before we move up. And you know the big picture. So something to keep in mind. If you're interested, check it out for those IBD subscribers. All right, RTY, we can talk about that more later in the weeks to come, as well as we'll be following this and seeing how well that does. All right, RTY, taking a look at the futures outlook for the week. Price action again, there it was. We found almost that support off the 200. Bounce back up, HA bars trending, bigger picture on the daily. Off the lows here in the February, back up to the highs. Beautiful, absolutely beautiful. But again, reversal coming up here. You saw the daily gaps. We'll bring up that picture here in a moment, but we're headed back to the all-time highs back here in January, sorry. So weekly, we definitely have more room all the way up to 17, 18, but definitely currently in trend, all in the green. Nice picture here on a 100 tick. So RTY 10 back above the 50. Like to see that hold. Any pullback would definitely bounce back to these levels. which would put us maybe at the upper levels up here, maybe major support back down to 1500, which would put us back in the range of the 200. But right now, currently strong uptrend in the week to come. Then you're going to look at the NQ, tech industry, supported by the FDN and XLK. No major levels other than perhaps an MML level, finding support down here in the short term. Bigger picture here as we roll into the new contract. We're on the M contract here, June contract. Price action, finding a little resistance here at the reversal. I got 7,500 on that big picture on the weekly. Remember, ES, we were looking at this big picture all along. If you take a look at the weekly, and all it took was a little bit of time to get up there. So as long as tech is sitting up there, 7,500 is the top number. But before we get there, maybe a pause here around 43.75. As long as HA bars are trending upside, I'm calling the confirmed uptrend still on the NQ. Any pullback, watch down to 6,800, the 50-period moving average. YM, again, a little bit more of a challenge here. We bounced off the shorter-term MMLs. We're back upside, resistance up to 684 after that huge dump. Back upside to 563 is the target. 563 would put us back up again on the weekly, shooting over and above the bigger picture here in the longer-term bar here. But we got to get back above that 50. We got to get that 10 back above that 50. So right now, definitely in a pullback. We need a little bit of stronger trend. I like to see the cloud go green here, and that would definitely give a confirmed uptrend. But right now, momentum, at least for the swing trader, nice move off the MML lows on the daily and weekly picture here around 438. You were wondering where that low would be, and that's exactly where it came in on that pullback there in mid-February. Hey guys, ES, same picture, still struggling to get that 10 back above the 50, but we got green bars headed back upside, 50-period moving average back up to the upside. Price action here heading back up. For some reason, I'm missing a bar here, so I'll have to correct that in the week to come. But finding support on the weekly at the major support, back upside. There's your numbers up here to 2850, 150, and we are all green cloud, and finding support in this move upside, perhaps back up to those all-time highs. Crude, little bit of a challenge on crude. It's a little bit of a mess. We know what crude looks like when it's in trend, both downside, both upside. Price action found some support here on the weekly at 59.38. It's been holding. It's got a little bit of a challenge up here, back up to 66.41. So taking a look at the daily, there it is. We're holding in both the short-term and swing position here from the ends of February, but we're chopping sideways, and that 10 is below the 50. That makes it a little bit of a challenge. So we're kind of mixed bag here on crude. And to get that back uptrend, we got to get price action back above that 50 and that 10 back above the 50. You can see here on the bars below, we're just kind of playing around in both directions. So we want to find that move off the MML support. We'll be looking up here, resistance up to 63.67. We're able to break that. That puts the price action back above the 50, and then we'll be looking back up to 64.06. Otherwise, if we hit the major support here at 62.50 and watching the daily HA bars and the tick chart, if it turns back down, we'll be looking back down to 60 all the way down to 59.38. So got to watch that intra-week. All right, gold. And speaking of gold, the CME holding its challenge here this week on gold, silver, palladium, a couple other. I don't remember all the markets they're trading, but if you didn't get a chance to sign up, I think it's a little bit too late, but maybe next time around. 10 below the 50. So remember, we've been calling this out for a while. After the bounce off of 1250, nice move up. Found the resistance on the weekly. Major support resistance here at 1312.50, and it's finding it on the daily. So as long as we continue to hold here since January at this 1312.50, watch for gold to price back up to 1343. But we're having a challenge. We got to get that 10 back up. We got to see that price action hold back above that 50. Then we could talk about higher numbers. Until then, anything downside, we'll be looking at 1281. That will be a bigger drop if we're unable to hold. As we see, we're having a little bit of challenge on the resistance. So kind of a downtrend call on the gold for now to consolidation, but definitely struggling here to break these levels upside. All right, Jedi traders, that is a insight into at least the technical momentum for the upcoming week. Let's go ahead and pull up the calendar as we head into Week 11, again, we're looking at CPI there on Tuesday. So that key number coming out as far as overall numbers, we got retail sales coming out. I believe it's on Thursday. And then as we hold out the week, let me see. We do have Quad Witch here, as you can see, the end of the week. Jolts on Friday as well. On my calendar, producer inflation and retail sales. We also have, I believe, we have some other key numbers this week. We got Adobe coming out, chip sectors reporting, and space industry conference on Thursday. So, again, exciting things happening in the space industry as well. All right, feel free to stop by at my website here. Lots of good information. I've started to bring back the ETF charts. They were a little bit outdated, so trying to put some more current stuff in. So please check those out, especially for those swing positions. If you're interested in more information on that, just check out that tab. Lots of good information here at my website, including my social media outlets here at StockTwits and at Trading Fibs on Twitter. Feel free to follow me for anything intraday. My trading mantra: one simple strategy, any market, any chart, any time frame will keep you disciplined. You can always find me at tradingfibs.com or tradingfibs on Twitter. I leave the crystal ball to the experts. I'm only watching what's on my charts. And speaking of charts, always leave your buys at the door when trade. But let's talk about charts for just one moment here as I wrap this extended outlook here. Forgiving Computers is one of our members in our trading room. Did a lot of great work with, that's right, go here to Education S3 Strategy, and you can find out more about that. The combination, which we have currently an amazing way of taking the overlay right now, the S3 T3 overlay, the ability to adapt to market scalping positions and longer trend, a nice trade management to follow here. So if you're interested in this strategy, combining the two, no major change here, Jedi traders. For those of you who've been with me for a while, we're just taking a scalping version of the T3 and overlaying it on the T3 moving average, where you're able to take some runners on when all things are green or all things are red in the market and give you an opportunity. So it's been very successful, a lot of successful traders. So again, this has been automated. So if you're interested in that system, for members, we got a discounted version of the room for the room. And if you're not interested in the trading room, that's fine. You can go ahead and just buy the purchase the system straight out. Again, that's forgivingcomputers.com. And for our members, if you're interested, this week we got on board with the Slack channel, the Slack app, and ability to communicate also outside trading hours and posing questions. A lot of channels to choose from, so go ahead and get subscribed on that as well. Lots of cool things happening here at Trading Fibs. Again, if you're interested in joining us, our community of like-minded traders, feel free to drop me a line. Just go here to the membership tab. There it is, david@tradingfibs.com. You can email me to join us with our like-minded traders seeking those highest probability steps. We'll try and get you in on a Thursday or Friday, or maybe a combo of that sort. Again, there's always so much information I can't cover in a 30-minute video. Again, perhaps I'll get back to doing a recap, split this up, make it a little bit shorter. So if you had the patience to sit here throughout, thank you for being here today. As far as week 11 is concerned, you just never know. Leave your bias at the door. That's the most important part for those intraday traders. For the swing traders, keep those eyes up, because the total stock market index continues to look upside, at least for the bigger picture. And for those who are in long-term positions, Q2 is almost about to roll out. Time to reposition. Jason Gelly's strategy is a great way to rebalance your portfolios. Until then, have yourselves a Blue Zone week, wherever you may be. Have yourselves a good day, a good night, and good trading to you.